Question 241. The current chairperson of the Federal Reserve Board, the Fed, is A. Ben Bernanke, B. Jerome Powell, C. Janet Yellen, D. Warren Buffett. Correct answer is B. Jerome Powell. Jerome Powell succeeded Janet Yellen. Question 242. A fire is racing toward a home that is in escrow. At this point, the risk of loss from fire damage belongs to the A. New owner, since escrow has been opened, B. New owner, since a purchase contract has been signed by the parties, C. Seller and the new owner share the cost of risk equally, D. Seller, since the closing documents have not yet been signed. Correct answer is D. Seller, since the closing documents have not yet been signed. Generally, the risk of loss remains with the seller until the title to the property is legally transferred to the buyer. This typically occurs upon the closing of escrow, when the deed is delivered. Until that point, the seller retains ownership and bears the responsibility for any damage to the property. While opening escrow and signing a purchase contract indicate a commitment to the transaction, they do not transfer ownership. The transfer of ownership occurs at closing. While certain agreements may shift the risk of loss prior to closing, normally the risk stays with the seller. Therefore, since the closing documents haven't been signed, the seller retains the risk of loss. Question 243. Applied to a property, the term non-homogeneity refers to its A. Indestructibility of a property, B. Unique physical aspects of a property, C. Degree of economic value related to the scarcity of a property, D. Lack of vegetation growing on the property. Correct answer is B. Unique physical aspects of a property. In real estate, non-homogeneity means that no two parcels of land are exactly alike. This uniqueness can stem from various factors, including location, size, shape, topography, improvements. Therefore, it specifically refers to the unique physical aspects of a property. Question 244. Husband Mike leases out a building owned by himself and his wife Jane as community property to lessee Larry. Mike signs the leasing agreement for a 2-year term, without the consent or signature of his wife. This agreement is A. Enforceable, B. Unenforceable, C. Voidable, D. Valid, if the wife verbally agrees after the agreement has been signed. Correct answer is B. Unenforceable. California law mandates that both spouses must participate in transactions involving community real property, especially when it comes to leases exceeding 1 year. Without the consent and signature of both spouses, such agreements are considered unenforceable. Therefore, Mike, acting alone, made the lease agreement unenforceable. Question 245. Adam has been getting to his horse stable every day for the last 7 years by driving across Randy's property, even though Randy has asked him to stop. A court would likely uphold Adam's right to continue this practice because his actions have created A. Prescription, B. Defeasible estate in fee, C. Adverse possession, D. Both A and C. Correct answer is A. Prescription. Adverse possession is a legal doctrine that allows someone to acquire ownership of land by occupying it for a certain period of time under specific conditions. While there are similarities, Adam is not trying to own the land, only use it for access. A prescriptive easement is a legal right to use another person's land acquired through continuous and open use over a specified period of time. Adam's daily use of Randy's property for 7 years, even after being asked to stop, fulfills the requirements for a prescriptive easement. Question 246. The judicial proceeding used to decide ownership when there is a cloud on title is called A. Suit for partition, B. Quiet title, C. Action for unclouded status, D. Partition. Correct answer is B. Quiet title. A quiet title action is a lawsuit filed to establish or clarify ownership of real property. It is used to remove clouds on title, which are any claims or encumbrances that may cast doubt on the validity of the property's ownership. The court's decision in a quiet title action establishes clear and marketable title. Question 247. A CalVet purchase loan must be applied for. A. Before a contract of sale is signed. B. Before taking title to the property. C. Within a year of the veteran's military discharge. D. Within 5 years of the veteran's military discharge. Correct answer is A. Before a contract of sale is signed. The CalVet loan program uniquely operates by having the California Department of Veterans Affairs purchase the property, then resell it to the veteran via a contract of sale. To participate, eligible veterans must apply for the CalVet loan before signing a purchase contract. There is no time limit based on the veteran's discharge date. Question 248. This statement regarding acknowledgements is correct. A. A deed composed and acknowledged out of state is legal. B. Acknowledgement by both the grantor and grantee is a requirement for a deed's validity. C. Acknowledgement can only be performed if witnessed by the county recorder in the county where the deeded property is situated. D. None of the above. Correct answer is A. A deed composed and acknowledged out of state is legal. Acknowledgement is a formal declaration before a notary public or other authorized official that the person signing a document, like a deed, is doing so voluntarily. While acknowledgement is often required for recording a deed, it is not always a requirement for the deed to be legally valid between the grantor and grantee. A deed acknowledged out of state is generally acceptable, as long as the acknowledgement meets the requirements of the state where it was performed. Only the grantor's acknowledgement is typically required. The grantee does not have to acknowledge. Acknowledgements are typically performed by notaries public, not necessarily the county recorder. Question 249. In order to balance the equities in the two properties in a tax-free exchange, money or other valuables such as cars, boats, stocks, or furniture may be added by the investor putting up the property of lesser value. That added cash or property is called A. Value-added offering. B. Supplementary valuation. C. Boot. D. Augmented equity fund. Correct answer is C. Boot. In a tax-free exchange, like a 1031 exchange, boot refers to any non-like-kind property received in the exchange. It's used to balance the equities when the exchanged properties are not of equal value. Boot can include cash, personal property, like cars, boats, etc., or even debt relief. Receiving boot can trigger a taxable event. Question 250. Is the deduction of capital expenses over a specific period of time. A. Accretion. B. Amortization. C. Hypothecation. D. Either A or B. Correct answer is B. Amortization. Accretion refers to the gradual increase of land by the deposit of alluvium, soil, from natural water action. Hypothecation is the act of pledging an asset as security for a loan without giving up possession of it. In accounting and finance, amortization refers to the systematic reduction of a debt or the spreading of capital expenses over a specific period of time. It usually applies to intangible assets such as patents, trademarks, copyrights and franchise licenses.